Enron has enjoyed a decade of really strong growth. I mean, we all know what's been happening recently, but if we look back over the last 10 years, our businesses have grown tremendously. Even without reinvesting dividends, with just the increased stock price, our shareholders got a total return of over 600%, about a seven-fold increase in their investment during this decade. And that's 1.5 times the return for the S&P 500 in what is now viewed as the strongest bull market in our history. And of course the Dow Jones, again, 1.5 times that, and about 3 times the return that the shareholders of our peer competitors, which are basically the other natural gas pipeline companies, which is the way this all got started in 1988.
But this is a map of what our business looked like in 1990. The EOG, Liquids, GPG were our big businesses. You see little tiny beginnings of businesses in the international markets and our domestic gas marketing activities. This is what that chart looks like today. Just an enormous change in the mix of businesses and the prospects for those businesses in the future. What you can see is we've retained virtually all the businesses we had at that time, with the exception of the liquids business, which we exited over the last couple of years. But you also see the enormous growth and potential in our merchant businesses, our wholesale businesses, our new retail business, and our communications business. Those businesses all have extremely strong growth prospects for the future, and they're pretty far downstream, so we are directly dealing with customers, which gives us the opportunity to differentiate our products and presumably make more money in the process. You also see Portland General as an addition in the lower growth but strong cash generation and earnings generation businesses of the company. But this is a remarkable transformation of a company. There's no one else in our industry that's made this type of transition, and it positions us, I think, extremely well for the future, because we have a great opportunity to maintain high growth rates and high profitability in our business by just continuing to do what we've done for the last decade. And as Ken said, that has been rewarded by the stock market. What this chart shows is Enron stock performance since the end of 1989 versus the pipeline average and the E&P average. And the importance of this is if you look at the way we started the decade, we were primarily a pipeline and E&P company. Had we stayed there, our performance probably would have tracked those averages, the yellow and the green line. The actual is the red line, and I think it shows the impact that intellectual capital or bringing new ideas and creativity to the business have had on the value of the company to our shareholders. And I think we're doing that in all of our businesses. I'll walk through all of our businesses very quickly, starting with exploration and production. In our largest market, North America, volumes increased over 4%. In India and Trinidad, we saw growth rates of 56 and 34% respectively, so continued strong growth in volume. We have hedged out all of the price exposure, our share of the price exposure, for the rest of this year, and the prices for the rest of this year are about $2.29 for the natural gas and about $16 per barrel of oil. So at this point, we can continue the strong volume growth with those prices that we've locked in. We should have good earnings performance from EOG for the remainder of the year. Our transportation and distribution segments, the highlights for the year. The chart on the left shows volumes through the pipeline network. You can see we went from about 9.1 BCF a day to 9.8 BCF a day. That reflects bringing up the northern border expansion. So in spite of a relatively warm winter, we showed strong volume growth across the system. And these businesses, Portland General and GPG, really underpin the rest of the company because they give us strong earnings performance and strong cash flow, which really protects and enhances our balance sheet. The real earnings growth story for the first quarter was in our wholesale business. We just had a stunning quarter in the wholesale business. This chart shows earnings before interest and taxes in that wholesale business. And as Ken showed, this business basically didn't exist 10 years ago. First quarter of 1999, the EBIT number was $320 million. So businesses basically didn't exist 10 years ago, had an EBIT contribution of $320 million. And it's continuing very strong growth, up 29% first quarter of 1999 over the first quarter of 1998. That's a growth rate that many computer companies and high-tech businesses would be very happy with. It continues to be driven by strong growth in volumes, very, very strong growth, and that's underpinned by our positions in different markets around the world. In North America, this chart just gets busier and busier, but what it shows is that we've put together a unique network of assets, contracts, liquidity in markets by buying and selling natural gas and electricity that gives us the best network for the delivery of natural gas and electricity of any competitor in North America by a significant margin. This is a tremendous asset for the company and basically cannot be replicated by our competitors. It gives us a very strong cost position, very reliable delivery, and this will underpin continued growth in North American wholesale volumes and profitability in the future. Another market, though, that I think we're going to be hearing a lot more about as time goes on is Europe. This chart shows volumes, and what you're seeing here is an explosion of a market. In February, the European Commission opened large segments of the market to competition for electricity on the continent of Europe. And so on the right side of this chart, you see the composition of transactions where we're doing business in Europe, and we have every intention of being the largest provider of natural gas and electricity on the continent as that market opens up. So we will be seeing very, very strong growth from Europe. South America, awesome story. We have a tremendous position, a tremendous strategic position in Argentina, or in all of South America. And in fact, this network, the asset positions we've had and the market franchises we have in South America may be our strongest network in the world. We have a unique, remarkable, very powerful strategic position in South America. And I won't go through all the specifics and lay out all the assets and components of our position in South America, but I will tell you that we will see very, very strong growth in this business as time goes on, and we have a very, very good position that's already starting to contribute some significant dollars to the bottom line, but I think will also contribute strong growth in the future. Let me talk about retail for just a minute. The retail business is a new business. We really started this about 2 years ago. And let me start at the right side of the chart. What we're doing in this market is we're providing a specific need for the customer. We give them light, conditioned air, and we will manage their facilities. That's not as easy as it sounds. In the old days, going to the left side of this chart, all of our customers used to have to deal with literally hundreds of market participants to get light, conditioned air, and managed facilities. Very complex process. What we're doing is providing a single source supplier to outsource those activities for our customers. We put together 5 things, 5 broad capabilities that we use to do that. Commodity management, delivery of the electricity and natural gas, energy information management, so that we understand how people consume and how we can change that, energy asset management to make it more efficient for those customers to consume energy or transform that energy into light, conditioned air, and managed facilities, facilities management, and providing capital management. Those 5 things, those 5 skills allow us to package under a single source all of those traditional suppliers to provide that service to the customer. And it's been a big success. In the first quarter, we did a number of significant outsourcing contracts. These are just 3: Ocean Spray, the Archdiocese of Chicago, the Houston Astros Stadium that we've all heard about. And we're seeing what I think will be extremely strong growth in this business for the future. So in 1997, we did $1.2 billion overall. 1998, we did $3.8 billion. This year, we'll do at least $8 billion in contracts. So just a strong, strong growth, good future business for Enron. So that walks us through all of our traditional or core businesses. Let me talk about the 2 new businesses. The first one, a very exciting area, Enron Communications. What Enron Communications does is they're putting together a network. They provide high-content media applications to business, basically very high bandwidth applications that need security and high quality. They're putting together a 20,000-mile network. By the end of this year, we will have access to most of the major cities in the United States. And then we're entering into a range of different industry partnerships with other players that allow us to provide a better service to our customers. Those 3 things basically give us what I call a semi-traditional telecommunications business, using better technology and better services for customers. The last one is also very interesting. We're now in the process of seeing if we can create a bandwidth trading market that will be similar to the kind of market that we've created in electricity and natural gas. That's not so far out, because if you think about it, we are trading capacity on electric wires and in gas pipelines every day. Why should these wires be any different than those? So we're working with the NYMEX to see if we can get a contract to trade, and we're starting to talk to customers. I think this could be an enormous market for us in the future, and in traditional Enron style, we'll be doing it very differently from everybody else in the industry, and I think that offers us a huge opportunity for growth in the future. You'll be hearing a lot more about this business this year because we're really ramping up activities here, and I think it's going to be a significant contributor to the company in the future. So overall, the company's in great shape. I think that's why the stock price is doing as well as it is. We have the platforms in place for business expansion and earnings growth in every single one of our businesses. What's particularly attractive is we have the leading competitive position in each of our core businesses. We are the #1 player in virtually every market that we compete in. We have a proven track record of creating value in new businesses, and we have the people and skills in place to widen our unassailable advantage. I'm choking up here. That's the unassailable advantage that just did it. We had to change that. We used to say to dominate markets. We got to stop that. That's why I'm gagging. But anyway, all of this, the summary is we are converting all of these things into increased shareholder value. Our stock price is doing well, and it should be doing well because the company is doing well.
Indeed, 1999 has turned out to be another a great year for Enron. Thus far this year, our revenues are up about 24% to just a little bit less than $30 billion in the first 3 quarters. We'll certainly end up the year north of $40 billion, probably somewhere in the $45 billion range. And we do think that this does reflect the underlying growth in the company. Obviously, the net income and EBIT are even more important, but certainly revenue continues to reflect how rapidly we're growing our various markets around the world. And of course, net income has grown very strongly this year, up about 32%, to just a little bit less than $700 million after-tax net income for the first 9 months. But we have somewhat more shares outstanding because of stock issues to raise capital to finance our growth businesses. So earnings per share is up about 13% to 87 cents a share. And let me say, of course, we're well into the 4th quarter now, and the 4th quarter is looking good. We'll end up the year in good shape, certainly meet the street's expectations. And again, it'll be a great year for Enron and Enron's shareholders. And of course, all of you in this room are also Enron shareholders. And again, if we had started this decade, we were basically a pipeline and an E&P company. But the Enron shareholders have seen about a 454% return this decade. So obviously, the changes in the company, the transformation of the company into largely a deregulated company, a company pursuing markets that are deregulating, has in fact given our shareholders very, very strong performance. And we think, in fact, we're positioned to give them even stronger performance as we move into the next decade. Now, with that, I'd like to turn it over to Jeff and let him come up and talk about the various business units.
Thanks, Ken. I'd like to, just as I start off, reinforce what Ken said when he came up here to begin with. We're actually streaming this video for the first time to a number of our remote locations. So I'd like to say hello to London, Portland, Calgary, and New York. And as I understand it, we're sending this on ECI's network. So if it's not crystal clear, we know who to call when we're done. So let me go through very quickly with the business unit update. As Ken said, we had a great quarter in the 3rd quarter, and things are progressing just wonderfully in the 4th quarter. Let me just go through each of the individual businesses. So as I look across all the different businesses of Enron, our transportation and distribution business, great cash flow, great earnings, continue to find growth opportunities in the marketplace. Our wholesale businesses, North America, Europe, South America, and India, showing very strong growth, extremely well positioned, and we typically have the #1 market position in every market that we compete in. Our retail business, brand new business, we are way ahead of the competitors right now. We've got a strong position there. It's growing fast. We're bringing in the customers. We are starting to execute on those contracts, but a great story, a great performance in that business. And then our communications business, it's new, it's different for Enron, but a lot of the characteristics of that business are similar, and it has enormous growth opportunities for the business. So when I look at Enron, all the different businesses and how they're performing, and I look at the stock price, we're selling at about a 28 multiple right now. That's low for the growth potential and the market position we have in all the markets we participate in. So I look for very strong growth in Enron stock price and strong performance from the company in the future.
Well, good afternoon. For those of you that are joining us by way of the internet, because this is being streamed to a number of our locations around the world today, but Jeff and Joe and I are here in London today, and this is being streamed, I think, in addition to other locations here in London. We're also streaming it to Houston, of course, Omaha, Portland, Calgary, New York, Stockholm, Frankfurt, Amsterdam, Oslo, Sao Paulo, Buenos Aires, and Rio. Just a few of the highlights for 1999, and let me say 1999 was an outstanding year for Enron, another outstanding year for Enron. In our transportation and distribution group, again, continuing to provide us very consistent earnings and cash flow growth, and of course good return on equity, particularly from the pipeline group. Our wholesale energy operations and services, which now is our single biggest profit center in the company. Another outstanding year. Our market share continued to increase in North America. We had a good starting year for the continental business here in Europe as that market for electricity began to open up, and good success made there over the last 12 months. We had a number of developing markets where we had a good start. But again, overall, just a really good, strong year for that business. Our retail energy services, and each of these you're going to hear a little more about later. But certainly 1999 was a year of strong contracting growth, which you'll see the numbers here in a minute. There's no doubt we're the leader in this business today by a big margin. We don't even see who, in fact, could be considered to be in second place right now. And, of course, they did go earnings positive in the fourth quarter this year, and we expect to have significant growth in earnings, positive earnings there this calendar year. And we are now beginning to take that whole concept of energy outsourcing and energy services to the international markets. First here in Europe, but already have plans to move it to other international markets throughout this year and in years to come. And, of course, broadband services, our newest business, and Jeff will talk quite a bit about that a little later, too. But 1999 was the year when we really brought the strategy together, brought the talent together, we got it focused, and, of course, we now have a game plan that is in fact, very exciting for the company going forward. And Jeff will talk a lot about that a little later on, but this is a business with enormous potential as we look forward. If we look at the numbers for 1999, again, all of the businesses had good positive growth, as you can see down through the line. But again, the wholesale energy operations, a 36% increase in income before interest and taxes. And of course, overall last year, we had about an 18% in earnings per share, which was a good year. Of course, about a 37% increase in total net income. Again, we had more shares outstanding last year, so somewhat less growth in earnings per share. But I think by any financial measure, a very, very strong year.
Just let me remind you how we're presenting this to the outside world. We're essentially breaking the business and communicating with the outside world about 4 separate operating activities within Enron. There's our transportation and distribution business. Those are our regulated utilities. So that's the gas pipeline group in North America and Portland General. Then we have our wholesale business, and as you know, the wholesale business has really been the locomotive for our growth in earnings and sales for really the last decade. And the numbers coming out of that business, which I would guess the vast majority of the people in this room are involved with, have just been phenomenal. I mean, just phenomenal for the last decade. And we expect to see continued growth in that business in the future. The third energy business is our retail business. We have turned the corner in the retail business. I always hated it when someone would write about Enron and they talk about us losing money in our retail business. Well, in the fourth quarter of last year, we went $7 million positive in the retail business. Now, that's up from a $26 million loss in an equivalent period in 1998. So that's a $33 million swing quarter over quarter. And I think that gives you a sense for the sort of operating leverage that we've got in that business moving forward. So I think we've got just tremendous prospects in the retail business moving forward. And they've turned the corner, and they are rocking and rolling right now and building that business for the future. This shows you how well we've been doing in contracting new energy services in EES. Just even to go back a little further in time, in 1996, we did zero business, zero. 1997, we did $1.2 billion. 98, 3.8. 1999, we did 8.5, and we have a target for next year of $16 billion. And I've been assured by the people that count, which are the people who actually do the business, that is absolutely sandbagging on their part. And the number will clearly exceed this. We'll probably come in $25, $30 billion. Right, Dan? But let me just tell you the numbers that go along with this, the earnings numbers that go along with this. In 1998, in EES, we invested, meaning that we lost, $160 million in the business. 1999, we lost $96 million, and as I said, we went earnings positive in the fourth quarter. And the target for the year 2000 is a $75 million plus, and we will make that. We will hit that number. So it gives you some sense for the kind of operating leverage. But it says something about how Enron builds these businesses, just like what we did in Europe. We make some significant investments to get in a big way. And that's people, that's systems, that's locations, facilities. And then we go out and we sell. And then once that line crosses, you get a lot of upside. And that's kind of the way Enron does business. But this is a real success story for the company. You can all be very proud of what's been accomplished there. Then the last business is our new business, which is the broadband business. I'll spend a little time going into that business. We have a very, very unique strategy in our broadband business. And this unique strategy is center of the fairway for Enron. Anyone from the wholesale business, anyone from EES would understand exactly what we're doing in this business. We are positioning ourselves in a way that will be almost identical to the positioning that we have in the wholesale business in natural gas and electricity. So it's a very, very different strategy from what other people are pursuing, but it's a very strong strategy. And you can tell from the response in the stock market that they like the strategy. It makes sense. Now all we have to do is execute, the simple part. We've got some very unique businesses in this company. I think we need to be thinking about these businesses as time goes on as knowledge-based networks supported by superior assets. We need to be thinking about the intellectual content of this because that's where we add value. That's where we make money for our shareholders. That's where we get a 50 multiple on our earnings number. We have large scale and extensive scope in every market we go into. And if we can't get that large scale and scope, it's probably not a market we want to participate in. We have innovative products and customized solutions. As an organization, I think we can say that we're pretty innovative. But we have some unique businesses. We continue to gain substantial market share in rapidly growing deregulated markets worldwide. And we're committed to providing substantially increased value to our shareholders. So the business, the operating highlights of the business, the global strategy, the company's in great shape. We are executing against the plan the way we should be executing against the plan. The company is doing really well.
For the second quarter this year, we again had an outstanding quarter, as most of you know. Our revenues were up about 75%, net income up about 30%, earnings per share up about 26%. But by every measure, and of course even more so if we start looking at some of the physical volumes and some of the underlying activity in the companies, which we will do this morning, it was a great quarter for Enron. And broadband was pretty much as expected, about an $8 million loss, even after selling some dark fiber, but well on plan. Again, we expect to lose about $60 million of EBIT there this year, getting that business going. But as you're going to hear a little later, particularly from Jeff, we're right on track in that business, and very exciting what's been happening the last few quarters.
Let me show you a couple of statistics that I just found very interesting for the quarter. This is in North America. The chart just shows our infrastructure in North America. As we've said before, we've developed the most flexible delivery network for natural gas and electricity that anyone has on the continent, period. And that's showing up now in our ability to move enormous volumes to market very quickly. The natural gas business, the chart on the upper left-hand side of this page, shows that we were up in North America 65% in physical volumes. In the United States, actually, we were up 97% physical volumes, second quarter of 2000 over the second quarter of 1999. Canada was up a paltry 30-something%, but it averaged out to 65%. I mean, these numbers are stunning. These are absolutely stunning. The reason that the stock price has reacted in the last couple of months, I think, is that people are surprised by these numbers. We added more sales of natural gas in the second quarter of this year versus the second quarter of last year than our next biggest competitor has overall. We added more than our next biggest competitor has overall in the last year. Power business continues to grow up 25%. Let me show you some numbers out of Europe. These are also stunning numbers. We are now getting to a size in physical volumes in Europe that it really is starting to have an impact on our overall numbers. But our UK volumes more than doubled, our Nordic volumes more than doubled, and our continental volumes were up by a factor of 13 times growth 2000 over 1999. And if you add all those together, it's about 8.3 BCF a day of throughput. That's more volume than Enron sold 3 years ago. So in Europe alone, we're doing more volume today than we sold in Enron overall 3 years ago. So just very, very strong growth in Europe. Now, one of the factors that's caused this is Enron Online. We've had a very successful introduction of Enron Online. We've now done 293,000 transactions for a gross transaction value of, the last numbers I saw actually were over $150 billion. That's billion, not million. $150 billion. This makes our website probably larger than anyone else's in the world by a factor of 10 in terms of transaction volume. So, I mean, just really significant performance. And we continue to grow. This chart shows daily volumes on Enron Online. The day before yesterday, I think it was, I don't know if Louise is here, day before yesterday, we did 3,192 transactions. So we reached a new peak 2 days ago, and so we're going to have to change the scale on this chart because it doesn't go up that high. But continued strong growth on Enron Online as this becomes accepted by many of our customers as a convenient way to do business. But anyway, just stunning performance in the wholesale business. Let me talk for a couple of minutes about the Enron Networks. Just to introduce this, this is a new area. You will be hearing more about it as time goes on. But we're providing an additional growth platform for the skills that we created in the natural gas and electric business in the wholesale markets. But we can take those skills to other industries. Many industries exist that sell commodity products through legacy distribution channels. The way we've redefined the distribution of gas and electricity, we think will spread to other industries because it's more efficient than having these legacy, complex, expensive distribution channels. The channels often consist of complex sales forces, long-term relationships with little price transparency, enormous inefficiencies in the pricing of commodity products. We think the Internet plus our business model and systems that we can provide offer a unique opportunity to have immediate and inexpensive access to customer bases in industries we don't currently compete in. So we're going to take a shot at this and see if it's possible to build some of these businesses in some areas outside of our traditional commodities. The retail energy business, one of my favorite charts. You know, we caught a lot of grief from the analyst community when we started EES in the early days because we were losing money. And I can understand that. That's not a good thing to do. But I'll tell you what, we have created a heck of a business here, and we're starting to get credit for it in the financial markets. This chart just shows some performance the first half of last couple of years, just to show you the kind of growth rates we're experiencing in EES. This just shows the quarter-by-quarter contracting activity, which is just a great chart. Customers like it. This shows some of the customers that we brought in first half of the year 2000. These are great customers. IBM, a $610 million 10-year transaction. Chase, $750 million 10-year transaction. Major manufacturer, that's one of those companies that really got a great name. We tried to get it too, but it was already taken. But they're trying to keep it secret. $583 million 10-year contract. Owens Corning, an upsell of a contract that we landed last year. Quebecor, $1 billion 10-year agreement. Prudential, $180 million 10-year agreement. Sunoco, $210 million. Rich Food. I mean, these are great customers. Last quarter, we also announced, I guess it was this quarter, we've announced Starwood Hotels. Starwood is Westin, Sheraton, St. Regis, the Luxury Collection, 4 Points, and W Hotels. But 400 properties in the United States are now being managed by Enron Energy Services. So this breaks us into the hospitality business in a big way. And I think we're going to start seeing a lot of follow-on. With what's going on now in energy prices around the country, there is a tremendous interest in this service. So I'd expect we'll see a lot of interest and a lot of additional growth in this business as we go forward. Broadband business, continuing to make progress on getting the network in place. We'll have 14,600 miles of fiber in place. We've already deployed 525 servers, a little bit behind schedule on the server deployment, Kenny, but I guess that's just the way things go. And then pooling point cities, we're going to beat our original estimate. I think we'll have 23 in by year end. But the network's looking like this. The servers are now being spread across the country. We've moved into Europe. We're in the process of getting Asia linked into the system. But this is becoming a real network, an effective network for our customers. We've also announced a number of commercial transactions. As a part of the Blockbuster transaction, we've developed relationships with new distribution partners, including SBC, Quest, Verizon, Covad, TELUS, Reflex. These customers, or these distribution partners, will help us get high-speed data out to households. So they'll get the DSL connections in place, which allow us to take high-speed data off of our network and get it all the way out to the customer. So overall, business is doing great. In every one of our businesses, we have market-leading positions. We have a solid core of business, and we're providing consistent, sustainable earnings growth. The street likes it. That's why the stock price has responded the way it has. At the same time, though, we have shown an ability to develop new businesses. We've created a number of new businesses that have been very, very successful, and these new businesses tend to have a high technology content, which the street also likes. But we are differentiating ourselves from the other players in the business. I mean, Enron is really the class act.
You know, for 5 straight years in a row, Enron's been named the most innovative company in America. For 5 straight years in a row. Now we've been named the most innovative company in the world. Should make us all feel pretty good, too.